Believe me or not, when I say this, most of you that are watching this video do not know what an actual auto block is. There are a lot of videos on YouTube that try to explain auto blocks, but all of them explain differently. They do not explain the way ICT explained. But in this video, I promise you, I will explain each and everything that ICT has thought about auto blocks. I will also teach you about high probability auto blocks, and I will also give you a trading model based around auto blocks. This is a 5-video series that I'm going to upload on this channel. We're going to start off with auto block, then we're going to move on to mitigation blocks, breaker blocks, and more. So let's understand what an actual auto block is. So consecutive bullish or bearish candles that sweep the liquidity and then form a market structure shift. So over here you can see that we have been going up, right? Higher high, higher low, higher high. We left this low. Now this is a liquidity level. Over here you can also see we have this low as well. Now once price took out the liquidity, right, we had a market structure shift. Now inside this move right here, you have to look for consecutive bearish candles. Consecutive bearish candles that sweep liquidity, and afterwards we get a market structure shift. Now once we have a sweep on the liquidity, we are simply waiting for a market structure shift, and we're looking to identify bearish, consecutive bearish candles here. So in that case, let's assume that the move from here to here was consecutive bearish candles. Now this is literally your auto block. Very, very simple. But I will teach you what are high probability auto blocks, and I will also give you a trading strategy based on it. So keep on watching till the end. Now you are simply looking to take your entry from this auto block, right? And you can look to target this high over here. Now, what are high probability auto blocks? So let's type in here. Auto blocks that form during London and New York kill zones, and auto blocks that form fair value gap as well. So if an auto block forms during London or New York kill zone, and that auto block also leaves a fair value gap here, so this is an auto block, right? And with this displacement, you also get a fair value gap, right? You also get a fair value gap here. So auto block and a fair value gap in this leg. Then that is a high probability auto block, and it's going to work most of the time. And don't worry, I'll give you a lot of examples. So make sure you stick till the end. Now, here is a trading model that you can use with auto blocks. But before we do that, let's invert the chart here and let's look at this in a bearish auto block manner. So what is a bearish auto block here? So consecutive bullish candles that sweep liquidity, and afterwards we get a market structure shift. Now the consecutive bullish candles are going to look something like this. Going to be here, right? These swept the liquidity, and afterwards, what do we have? Price taps into this level, and we have a push down. Now, similarly, if you are looking for high probability auto blocks, you would look for a formation of auto block during the London or the New York session, the kill zone, and auto block that form fair value gap. Very simple, guys. So let me give you guys a trading model as well. So first off, all you have to do is identify high time frame order flow. Okay, you have to identify where the market is going. So my higher time frame auto flow would be 4 hours. On the 4-hour time frame, I have to look the market structure. Are we consecutively consistently making higher highs and higher lows, or we are making lower lows and lower highs? Now, the easy way to identify the auto flow is once I open up a pair, so let's say I open up EURUSD, I should be able to identify the market direction within 5 seconds. If I start to overthink about the market direction, if I keep thinking about, the auto flow after 5 seconds, then I should move on from that pair and I should not be trading that pair because the market structure is clearly not clear enough for me to identify whether the auto flow is bullish or bearish. So number one, we identify high time frame auto flow. Now, once you have identified the higher time frame auto flow, what you are looking for is a sell side. Let's assume that the auto flow is bullish. Now, on the 4-hour time frame, all you're looking for is a liquidity sweep, or price comes into a 4-hour auto block. So let's remove this. So the first scenario would be we have this low and price sweeps this low over here. Now, once price sweeps, let's type this in, lick sweep on 4-hour. Now, once price sweeps the liquidity on the 4-hour time frame, we drop to 15 minutes time frame. And number 4, we then look for a market structure shift during kill zone hours. Now, once you get a liquidity sweep on the 4-hour time frame, you drop to 15 minutes time frame, and afterwards you look for a market structure shift during kill zone hours. Very important. Now you're simply looking to take your entry from the 15-minute auto block. So it's going to be somewhere around here. And you're going to take your entry here, and you can go for 1-to-2 risk to reward ratio. Put your stop right below this low. Very, very simple. And similarly, instead of looking for liquidity sweep, you can look for a 4-hour auto block, right? So let's move this up like that. So there was no liquidity sweep, but there was an auto block here, right? Let's move this up like that a bit so it gets clean. So price taps into the auto block, the 4-hour auto block, right? And afterwards, we get a 15-minute market structure shift during kill zone hours. In a bullish program, in a bullish auto flow. Now, once we get a market structure shift, we are simply looking for our entry from the 15-minute auto block. That would form somewhere around here. Very, very simple, guys. So let me give you guys some examples about auto blocks, and then I will end the video. Before moving on to the examples, I want to talk about my private course and my private Discord server. I rarely do this, but I think this is beneficial for you because there is a new course update coming out in a couple of days. So for just $97 one-time payment, you get access to my private Discord server where I share my own trades. You get monthly course update with new videos, weekly Q&A and more, and you get awesome community of successful traders. So here's my backstory a little bit. You can go to the website and check it out. Then here's some proof of students passing the challenge. This is only one, but I'll show you more. For the course content, you get ICT basics if you're just starting out. Then we have the no daily bias strategies. So these strategies require no daily bias, right? With multiple examples. Then we got the ICT essentials like S&P divergence, BPR, breakup block, ABCD, Asian session strategies, and all that juicy stuff. And this is my favorite section where I teach daily bias, weekly bias, monthly bias, market maker models, second distribution entries, the holy grail, and risk management for prop firms, standard deviation, quarterly theory, FUG, liquidity, and whatnot. So here's some proof of me passing the challenges. There's a couple more on my Instagram. Here's some students passing the challenge, some proof here and whatnot. All right, let's move on to the video. The link is in the description if you want to check out, but it is not necessary. Please, you can become profitable by watching these videos. So over here in a bearish program on the 4-hour time frame, I'm looking at EURUSD. What do we have? We have a sweep on the buy side liquidity. Now, once we have that, we are dropping down to 15 minutes time frame. And I'm giving you an example of the trading model plus Orderblocks. So we are waiting for a market structure shift during kill zone hours. And right over here, what you can see, we have this low here. And what did happen? We swept the liquidity, right? And we also swept this high over here. And after that, we had a market structure shift during kill zone hours. Now look at this, consecutive bullish candles. So this entire, remember, we do not account for the wicks. We only mark out the body. So the body is an actual order block. Now over here, what you can see, this is going to be our entry zone. We're going to put our short position here. Remember, a order block with fair value gap is a high probability order block. And if that fair value gap, any part of that fair value gap is aligning with the order block, that makes it even more high probability. Okay, so over here, I would go short here, stop right above the high, and I would go for 1-to-2 risk to reward ratio. So if I play this through, you will see that we got a tap here, and the take profit level was hit, and price kept going down. So let me give you guys another example. All right, everyone. So here is another example. This time, instead of looking at the liquidity sweep on the 4-hour, we are only going to trade off of this order block. So as soon as I open the chart on the 4-hour on the AUDUSD, I should be able to identify the market direction. And clearly we are going up. I do not need to look at anything else. I do not need to go back. I'm just looking at the current price action, and we are going up, right? So over here, what do we have? We have this order block here, right, on the 4-hour time frame, or you can say a support level, because an order block or fair value gap, whatever there's out there, is basically support and resistance. I do not care what anyone else says, but that's the truth. Okay, so this order block here, we are waiting for price to come back into this order block. So we're going to drop down to 15-minute time frame, and we are looking for a market structure shift during kill zone hours. And just around here with the body closure, you can see the body closed. So we have a market structure shift, and we have consecutive bearish candles, right? We swept this liquidity. We also swept this low. So that is consecutive bearish candles that swept liquidity. And afterwards, we had a market structure shift during kill zone hours. And what makes this order block more high probability is very simple. We have fair value gap here that is in alignment with this order block. We have this fair value gap that is also in alignment with this candle. So we're going to go long here. We're going to put our stop right below this low. And we are going for 1-to-2 risk to reward ratio. And if I play this through, you will see that we got a beautiful tap and we had a beautiful push to the upside. Now, personally, I go for 1-to-2, but if you have your personal risk management strategy, you can use it with this. Let me give you guys one more example, and then I will end the video. All right, everybody. So here is the last example. I'm looking at NAS 100 on the 4-hour time frame. And as soon as I open the chart, within 5 seconds, I was able to identify the market direction. We are going up. Thank you very much. Now, over here, what do we see? We have a higher high, higher low, and then a higher high. So we're waiting for a sweep of this low or this low here, because basically these are relative equal lows. Now, once price swept the low here, all I'm waiting for is dropping down to 15 minutes time frame. And if you do not trade indices, you can see that we had a sweep of liquidity and we are in the PM session. All right, so for indices, we can also trade the PM session. And if you don't have a knowledge about this, I'll explain it later in some other video. But for now, this is also during kills on hours. And if you're familiar with ICT concepts and you trade indices, you should know that. So please do not comment down below, oh my God, this is not in kills on hours. This is a kills on hour for indices. Thank you very much. All right. So over here, what do we have? Market structure shift during kills on hours. We have this fair value gap. Some part of it is inside this order block. It is in alignment with it. But I wouldn't call this a high probability order block. I mean, it is high probability because we got a market structure shift during kills on hours. And there was an old fair value gap here, but nothing really matters. We are only focusing on the order block. So consecutive bearish candles. Look at this, the last two candles, right? This entire move to the downside swept this low. And afterwards, we had a market structure shift. Now, after market structure shift, we wait for an entry. And remember, the entry also must be during kill zone hours. Price taps into this order block. We went into a little drawdown. Stop would have been here. But let's put this like that. And go for 1 to 2 risk to reward ratio. And you will see that price came back once again, swept this low, didn't stop us out, but then we had our take profit level finally hit. So this was a little different example, but I hope you guys enjoyed and learned about auto blocks from this video. I'm really sorry I couldn't show my face in this video. I'm a bit sick. I just came back from Turkey. It was a great tour, and I'm glad to be back and making videos for you guys. So thank you so much. I'll see you guys next weekend. Take care. Goodbye for now.